What were some of the comments that you got like after you had these two very popular episodes?
You know, my wife, like, whenever I share this, right, she's like, hey, why you tell everyone how much you earn?
Kelvin, welcome to our studio.
Thanks for the invite.
Awesome. Yeah. Thanks for coming to our So Far So Good. Yeah. Heard a lot about you. Watched a couple of your videos as well.
I've also been a huge fan of you guys since like 4 or 5 years ago.
Wow. Great. Today we're going to talk about investing. And also talk a little bit about your journey in content creation in the investing space, in the finance space. Maybe a quick introduction to our audience on your content on YouTube.
My name is Kelvin. I run a YouTube channel called Kelvin Learns Investing, where I talk about everything related to money because I like money. Basically, stuff like credit cards, savings, investment. Basically anything that can make you money, I will try to talk about it.
Okay. Yeah. Right. What is the hottest topic now? Now we're in December 2022. By the time this will be Q1 2023. Hottest topic now for finance.
The hottest topic now is the Fed raising the interest rate to, I think, 4 point something percent. Correct me if I'm wrong.
And I just saw your latest episode on the Fed pivot. I also follow CNBC and Bloomberg quite a fair bit. Some people are saying that, every time when Fed pivot occurs, there will be like a possible risk of recession. And then before the upturn comes, provided whether there will be QE or things like that. What are your personal opinions on that?
Yeah, I saw that chart too. It was quite controversial. By pivoting means that they start cutting rates, right? So by right, when they cut rates, the market should go back up. Right. But instead, actually, there's a recession going on. You have to think, why is the Fed pivoting? The whole reason the Fed is raising interest rates is to fight inflation.
Right.
So the whole reason they are pivoting means that the inflation is now going down, and they have done their job of fighting this whole inflation. So when inflation is going down, that means the whole economy isn't doing that well. And when the economy is going down, that means there's a recession. In short, the Fed has achieved their goal,
right,
and of crashing the market. In this upcoming Fed pivot, I do believe a recession will be coming soon. That's my prediction. But I don't think it will be as bad as all the other previous recession, like 1980s recession, where the inflation hit like 15% high. Now it's just like 7%.
Right.
Back then, unemployment rate was like double digits. Now it's just like 3-4%. So it's nowhere near that kind of magnitude. Even if a recession did come, right, I don't think the crash will be as hard. I don't think things will be as bad as it seems.
Right. And towards the end of that episode, I saw that you're an advocate of dollar cost averaging.
Yes.
Staying in the market, not to time the market. It's quite similar to what we also advocate to our clients for real estate, because real estate is more illiquid.
Yes.
Based on statistics, people own properties between the range of 5 to 8 years. Even if, let's say, there will be any recession going on, usually people do not fire sale their own stay property. I mean, everybody has their own property to live in. Correct. Their kids are studying nearby. It's very hard to see like a fire sale situation unless we're talking about secondary or third kind of property investment. Based on your dollar cost averaging approach, and of course I believe you have other methodologies, where do you learn all your investment kind of knowledge from? And okay, share with our audience, how old are you this year?
I'm 35.
35, okay. Yeah. So at which age do you start learning about investing?
So I started back in 2016, and I thought that like everyone else that everyone is a genius in trading. Turns out I'm not. I'm not a genius. I lost money.
2016 was 6 years back, so that time you were 29.
Yeah, around there.
Okay, and what were you working as when you started learning about investing?
I was working as a programmer.
Okay.
So I've saved up about 7-8 years of money. I was thinking, what can I do with it? Maybe I can get rich with it.
Right.
So I start dumping money into the market, trying to trade it. I think the market just humbled me. I said, you are not a good trader. So It just made me lose money, and I stopped investing back then. I started really investing only about 2 years ago when the market was going up. So I thought that this was a good chance. And also at the same time, I was starting this whole YouTube thing. So that's when I start really investing and show that investing has a real way of investing and a wrong way.
Share with us your 29-year-old to 30-year-old experience where that was the first time you tried investing. What do you first invest in? I mean, back then with initial kind of knowledge, and then what lesson do you draw from that?
So back then I was looking at the top volumes, top gainers for that day. Then I see, if this can go 10-20% up, this must be a good stock.
Right.
Turns out it was not a good stock.
Right.
So then I later realized that all these stocks that can pump up so high is because somebody is trying to manipulate it. A stock going up 10-20% doesn't mean that it's a good stock, but rather like if a stock can continue this uptrend for a very long time, then it will be a good stock. Like for example, Microsoft, Apple, Amazon, those kind of stocks. Fast forward to 2020, I only realized this.
Okay.
So now I will just look for companies that are really earning money, not just earning money, but more like growing their earnings, have a moat in the market so that no competitors can overtake it. Those kind of basic stuff. So as long as I stick to this, then this will be a good strategy.
Right. So do you advocate yourself to as a value investor like Warren Buffett methodology? Because I heard the word you use moat.
For Warren Buffett, for him to buy a stock, he has to buy a stock that's at the correct valuation. So, but for me, I'm more like a growth investor. So I buy stocks that have a high growth potential, like the stocks that I mentioned just now, Apple, Microsoft, Google, all the tech stocks, including Tesla. My fans will know that I like to invest in Tesla.
Okay.
So it's because they have this very huge moat that's not possible to be overtaken so easily. For example, for Amazon, it has a huge e-commerce business in the US. There's like 90%? I don't know, somewhere there. There's the whole cloud computing that is within the game. Unless someone overtakes it, there's no way they can lose money.
Right.
Just keep investing in the winners, basically.
Right. So yours is more of the growth investing methodology.
Correct.
Plus dollar cost averaging.
So I take some of the lessons from Warren Buffett. Like he has to have a good moat. It must be earning money. It must have low debt, but not necessarily a cheap stock because it's very hard to find cheap stocks in growth stocks unless there's a market crash like right now.
Right. What are basically some of the investment angles for 2023 based on your own opinion that you think a recession might be coming in the US?
During recessions, the market will typically bottom within 5 to 6 months. Historically speaking, I'm not saying that will happen now.
Okay.
That just means that you can't wait for the recession to end to only go in because by then it will be too late already. So I would just say dollar cost average, or if you think you can time the market, you can try. But I think even if you try and succeed this one time, it doesn't mean that you will succeed every single time. I would suggest just keep dollar cost average because that's the easiest way to keep yourself emotionally stable. This whole year, the market was crashing.
Yeah.
All my viewers were telling me, hey, how?
Right.
Then my response is always, as long as you are investing in a good stock, all these bad things are over, then there's nothing stopping the company from growing already. So my advice would be just keep dollar cost average, just invest in good stocks, and like over the long term, you'll be fine already.
How about cryptocurrency? Do you invest in cryptocurrency?
Many degenerates out there. I did invest in crypto, but I limit my exposure to like 5%. Then during the run up, it went up to like 10-15%, and it crashed back down to like 2-3% now.
Right.
So after this whole crash, I realized that, and people invest in crypto, they are only thinking about the gains. Like, okay, Bitcoin, can it go up 500%, 1000% by like 5 years? What they don't think about is crypto, how low can it crash? Traditionally, crypto has crashed like 90% every few years. So that's the two blue chips in the crypto space, the Bitcoin and the Ethereum. If you are new to crypto and you want to try playing with crypto, right? I would suggest just go with these two. When people think about crypto, they only think about that making money part. They don't think about the functionality of crypto. So when you think about Bitcoin and Ethereum, both of them have the most proven track record for functionality. Yeah, while the rest feels like trying to clone. You see all of them trying to claim itself as the Bitcoin killer, the Ethereum killer. All of them are just clones in some way or another. So why not just invest in the original stuff? There's more proven track record. There's more investor investing in it, and just see where it goes from here on. It may go to zero, for all we know. But if it goes to zero, I think the crypto space is like they're almost dead already.
Right.
Which I believe it won't happen. So yeah, see where it goes.
Right. So you allocate about 5% to crypto investing. And yesterday before you came, I was just looking at one of the most popular video, which is I think you did it in 2020 or 2019 about your portfolio. Yeah. So maybe share with our audience like how do you manage your portfolio in terms of percentages? Example, stocks, roughly how many percent of portfolio? Cryptocurrency, you mentioned 5. And any other things do you invest in?
Okay, so let me just give a quick history of my portfolio. In 2020, okay, I started with dividend stocks. So I believe like, okay, you invest in this stock, it pays you a dividend and everyone is happy lah.
5 to 7%, right?
Then turns out I'm not happy with the returns. I saw index investing, index funds, ETFs can give a higher return than just that 4 or 5%. So I jumped from dividend investing into index investing. Then in 2020, I jumped into this hot stock, Tesla. So I think like many investors in Singapore, they believe that this Tesla will bring them to the moon or whatever. So I was one of them. So I started keep dollar cost average into this just one stock, Tesla. All the way until this year. After talking to many other bloggers in the financial space, I realized that actually concentrating on just one stock is not that safe. Now I've started to diversify into other tech stocks. My goal is to diversify like 20%, 1/5 into like Tesla, 1/5 into Google, 1/5 into Microsoft. These kind of stocks.
Right.
Just lower the risk lah. Don't be so like kanchong spider to reach 1,000% or whatever. Every year I'm trying to keep improving on these investment strategies lah. So moving forward, maybe I will try to add in, make it less risky or whatever. But I don't know how it will be because I'm still learning.
Right.
So let's see where it goes.
Is that why you call your channel Kelvin Learns Investing?
Yeah. So
it's like you're on a learning journey with your audience.
So right at the start, the stuff that I know back then was like maybe 1 to 2%. Now it's like maybe 6-7%, a bit more.
Okay.
So there's still more to learn. That's why this channel will keep going on.
Quick tip for our audience is that if let's say you're a young adult and then you just started working, you start to have some savings every month from your full-time work. How do you quickly learn about investing? Like what books do you read or who do you follow?
To be honest, I don't read books.
Okay.
Like people recommend The Intelligent Investor. So I tried reading chapter 1. I found that it was too dry. Then like, okay stop. Then I started reading blogs. Those were good. For example, Dollars and Cents, Seedly. You'll find that they recommend very safe investments. So it's good if you want to not lose too much money. So then if you want more riskier stuff, you have to look towards YouTube where people can say whatever they want. So I've learned from different places, the risky ones, the safe ones. So if you are new to the whole investing game, right, I think my advice would be first, it depends how comfortable are you with losing money. I think it's unavoidable in the short term, but over the long term, you should be earning money. Your goal is always to be earning money over the long term. There are two ways. If you think you're like a god of investing or whatever, it's okay to try dabbling in very risky stuff and lose money. When you are overconfident that you are very good in investing, right, you will start making very risky stuff. You will almost certainly lose money in some way or another. So that will wake you up. You will start going safer ways. That's what I did back in 2016. Right. I thought I was good until the market humbled me. But if you don't want to do that, just go for the safe stuff. Start with the safe stuff like the S&P 500, the QQQ, the STI ETF, all this kind of safe stuff. Maybe once you have a base already, then you can start looking at small amounts of risky stuff to try and satisfy your inner urges.
Right.
So there are two different ways. First, you can try trading or whatever, try to humble yourself first. Remind yourself that you are not god of investing. Okay. Or if you want to take the safe route, start building out a base first, then you can start going for risky stuff, but in small amounts. So there are different ways.
Right. Yeah. So you mentioned that 29 years old was the year you started investing with all your savings for the past 7 years. So I presume you started working at 22.
Yeah.
And then that time you were a programmer. What were you programming?
I was working as a game programmer.
And now, are you still a programmer or you're a full-time YouTube creator?
Yeah, full-time. I've no more time to program.
Okay, so you create content full-time.
Correct.
And then you invest full-time.
I wouldn't say I invest full-time. Like people say they are full-time investor means that they are not working or whatever.
Right.
Okay, I invest on the side, but my full-time job is YouTube.
Right. Okay. Share your advice to young adults. I mean, there's been a lot of topics revolving about cost of living in Singapore. That it's very difficult to save money as a young adult. I mean, now you're 35, I'm 41. Then if we were to imagine ourselves to be like a fresh grad now, and with the cost of living in Singapore, what is your advice for young adults nowadays if they're just starting out? How do they create that savings per month in order to invest in liquid assets first, like the equity stock market? So how do a young adult get started?
I would say, okay, there are two roads again. So the first road, right, I've seen people who, once they graduate, they start traveling around the world, more like exploring the inner self. Then they start working maybe 2-3 years later.
Right.
Then the other side is like people tell you that you can start saving and investing as early as you can because there's the compounding magic. Right? I would say if you are young, the amount that you can earn and save, right, is actually not that much. If your goal is not to like retire by 30 years old, you can try exploring your life a bit. Because once you reach like 35, like right now, if you have a family, you are sort of anchored down. You can't really travel already. That $2,000-3,000 may not worth as much as back then when you are still single. That 2-3,000 will actually give you a lot more life experience, life points that you can learn from. So there are two different ways. If you want to YOLO, you can YOLO first. If you want to retire early, you can consider like try to save as much as you can.
Right.
So the first advice is to think of what's your goal when you are 30 years old, 40 years old. Depending on what's your goal, you will have sort of a compass already on what to do. For example, back then when I first graduated, I totally had no idea what to do with the money other than just put it in the bank.
Where do you get your savings from when you first graduate?
My job.
So you were working when you were studying?
Okay, so my parents gave me money for the first few months till I found a job. Then everything is my own already. All the savings were my own money. A lot of people don't have any idea what to do with that money at all, other than just to save and spend and retire. Right. So that's their life goal. Try to survive until 65 years old, until the CPF payouts, and you are done with life. Right. But recently, maybe 4 or 5 years ago, I started to realize, okay, there's actually more to life than just this whole journey from 20 to 60 years old working. And there's the whole financial independence, retire early movement, where you try to save and invest as much as you can. So once you have this goal, right, you tell yourself that, okay, by saving $5 on this Starbucks coffee, maybe I will retire 1 minute earlier. By saving on this $20 Grab ride, I will retire earlier by maybe 1 hour. It's that kind of mindset. So once you have a goal, it makes justifying saving money a lot more easier. Right. But without this goal, right, you're like, why am I saving this for? I might as well spend it, right? Maybe I'm going to die next day. Right? So just try to live my life happily. So in conclusion, try to have a goal, then you will have a compass to know what to do with your money.
So what is your goal?
So my goal is to retire by 40 years old with $1 million in the portfolio. Right. And with this $1 million is able to give me a decent income every month, about $1,000, I think.
Based on dividends?
Based on dividends or selling the portfolio. Because by right, people have done this research before. Like if the portfolio is able to grow at the same rate as the market, like maybe 10%, historically speaking. If you only withdraw 4% from this portfolio, so 10 minus 4, right, even if you withdraw, the portfolio is still growing at 6% growth rate. So technically, the portfolio will never run out of money. That's what I'm trying to aim for right now. To have this big enough portfolio so that I can keep withdrawing, so that even though if my YouTube stops working one day, I can still live on this portfolio.
Right. So, okay, this 4% thing I heard of before, there's a slogan to it. What is that called?
The 4% rule, or rather known as the Trinity study.
Oh, okay.
Yeah.
So it's a 10% growth, then you extract 4% out every year.
Yeah. Right. So they test it over different market conditions, like during recessions. They test it over different periods, maybe 70, 80 years. Over different, like the World War II, the Vietnam War, the Cuban Missile Crisis, all the different crises that's going on, and still yet the market was able to give 10% return over the long term. And the guy who is doing this back testing found that the portfolio never goes to zero.
But it has to be $1 million.
Okay, so this $1 million
it's based on your own needs.
It's based on my own needs. Let's say if you can just survive based on just $1,000 expense every year, every month. Okay. Then you just use some formula to come up with this amount. If you want to have a bigger safety, then you just have a bigger portfolio. Okay. Yeah. So for me, I try to keep my expenses very lean. Right. Like live in HDB, no cars, whatever. So this $1 million portfolio is able to let me survive for like 40 years without running out of money.
So are you after freedom?
Yeah. So freedom. So like people chase money, I chase freedom. So with freedom means that I don't have to keep working on YouTube. When I work for YouTube, I won't lie that I do it for money. Right? Okay, people, even though it's my passion, right? I have to do it because I'm chasing this goal. So once I have this goal, I no longer am bounded to earning money. So that makes me free lah. I can just say, oh, I can say bye-bye. That kind of thinking lah.
Right.
So even for normal people, that's why I tell them, if you don't like your job, you do something about your life lor. Try to save this $1 million portfolio so that you can like quit your job and travel the world, live the world the way that you want to lor.
When do you start to cast this goal? Was it just 2 years back? This you want to have $1 million portfolio?
I think it was around 3-4 years back.
3-4 years ago.
Yeah. That was when I started lor. And now I'm about 1/3 and I have 5 more years left to go lor.
Right.
So hopefully I will reach there.
Right. Great. Okay. I wanted to ask about so we talk about like a little bit about the young adults and the cost of living and stuff like that. So like in your perspective, where do you think Singapore is going? Like in terms of cost of living, inflation, and then now a lot of young adults are talking about, when am I going to get my first property and things like that. Where do you think we are going in the next 5 to 10 years, and then how do young people navigate this? I wouldn't say it's traditional. I would say that, because of our policies and things like that, the route is get married so you can get a BTO fast. And if you don't get married, you can only until 35 so to own your first resale HDB flat. Sometimes young people see that this is like a rat race. What are your advice for young people?
So when I look at this whole property market, previously in the past few years, the property price have actually caught up to the whole trend. So previously it wasn't trending up that fast. So basically it's a mean reversion. It's just trending up as per normal, as per supply and demand.
Right.
So previously the demand wasn't as high. After this whole COVID thing, then the demand suddenly boom. That's why everyone is complaining that the property price are going up.
Very high.
And this trend will just continue. So basically the income over the housing price.
Right.
When I compare it to overseas countries like Japan, Australia or whatever, Singapore is actually in line with them.
With the global standard.
Yes, if you can say that it's expensive, other big cities have the exact same ratio. So it's not that Singapore is super expensive. When you want to talk about expensive, you can look at Hong Kong and Shanghai. That's where things are really expensive. Haven't really factored in all the government grants and stuff, right? When you throw all this in, you will see that things are actually much cheaper than we think. Maybe people have it maybe too easy so that when people see the current situation, they say, hey, how come things are getting more expensive now? Things are getting expensive now because the situation have finally caught up to them.
Right.
That's what I think. So back to the thing that I said earlier, if you're not happy with your life, either you have to set your expectations correctly or you just try to find a better paying job. It's either one of that. Right. Or you can leave Singapore and go to a cheaper place, right? I think it's called geo arbitrage, where people have done it before. Move to Bali, move to Malaysia, move to Thailand to use the Singapore dollar to have a better life.
Right.
Yeah.
Great. And how about yourself? Like, do you personally believe in real estate investments? Just like you mentioned for your perspective, because your goal is in 5 years' time, hit $1 million portfolio, and then you try to live as low expense as possible. But how about yourself? Like, will you ever go into real estate investing? Not that I want you to buy a property through us, but just your thoughts.
So about 2 years ago, I compared the returns based on monthly use that I will get based on HDB, condo, and commercial. And my conclusion was that commercial has the highest use out of the three. So I can rent it out, and it's easier to rent it out compared to all the other two because there's less cost involved. But the thing too is that if you want to buy a commercial property, you will have to have a big amount of capital lying on the side, which I think most people won't have access to unless they are doing some high paying job or whatever. So for now, I wouldn't consider property, but until I reach my $1 million goal, I will only start to look into property as a form of diversifying. But right now, with property heating up, I'm having second thoughts.
Okay, so you focus on your equity portfolio?
Yeah, for now.
Right. Okay, great. That very popular episode that you had, right? Revealing my 300K portfolio, how to earn $6,000 a month with options. Have you ever regretted sharing your portfolio? And then what were some of the comments that you got after you had these 2 very popular episodes?
My wife, whenever I share this, right, she's like, hey, why you tell everyone how much you earn?
Then on the streets, do you have people come up to you and then to ask you about these things?
They ask me about No, they don't. They don't.
Okay,
They just say,
okay.
hi, Kelvin, we just want to take photo with you, that kind of. They wouldn't
Okay.
ask me about that. Online, people will ask me about that.
Okay.
How's your portfolio doing now that your Tesla has dropped by 50%? So I think the whole reason I'm trying to share is that first is to be transparent. Like since I say that this is a good stock, that's why I'm investing in it. Since I say that dollar cost averaging is a good strategy, that's why I'm doing it. Then the other reason is that I want people to critique how my portfolio is. If this portfolio is bad, with online being anonymous, everyone being anonymous, right? They will start to like, okay, this portfolio sucks. Some will say that. So if too many people say that, that means something is wrong with this portfolio or whatever, or this option strategy thing that I'm doing. So then it's up to me to see, actually, is what they say, is it true, or are they just trolling around? So that's the whole reason I'm trying to change my portfolio strategy now, because I realized that my current portfolio is a bit too risky for my own self. And that's because too many people say the same thing.
Okay. So you also take the comments as a learning
Correct.
kind of like a benchmark.
Yes.
Okay.
Yeah,
right.
so I see it as a feedback. So I do something, I post it out, see what people say. If they say that sucks, then maybe something is wrong with it. Then I will try to think how can I improve it further.
Okay.
Yeah.
I also read one of your interviews with I think it was on Dollar and Cents or something, and then you talk a little bit about after you quit your job as a programmer, then you focus on YouTube, and then you also adopted the option strategy.
Oh, okay.
Yeah. Can you share a little bit about what is this option strategy about?
So basically, a very simple explanation, analogy. Okay. A stock is a house. You think of a stock as a house, $1 million house. You think of an option as a deposit, a 5K deposit to buy this house. This 5K deposit will expire in 1 month. If you want to use this option to buy this house, then you can just exercise this option to buy this house. Otherwise, this option will expire worthless. You just throw away that 5K.
Right.
So this is you buying this 5K deposit.
Right.
So I'm on the other side. I'm on the side that's selling this 5K deposit. So I would say that, you want to buy my stock, my 100 Tesla stock? If you want, I will sell you this option at $1,000. If Tesla, the stock price goes up, then I will have to sell my stock to him. So if it doesn't, then I will get to keep his deposit money.
Right.
So that's the strategy that I'm doing. I'm trying to bet that.
You're on the put option.
I'm betting both like call and put. Either way, I'm just selling deposit to people.
Right.
People pay me. So basically, they are betting that the stock will go up. I'm betting that the stock won't go up to a certain price. So as long as it's below this certain price, then I will always profit. Right. So that's the strategy that I'm doing now. It's currently working well because I'm putting it at a very, very far distance. Okay. Like I would say that, okay, Tesla, it won't go up by like 40-50% in a month. I'm always doing a month. And it won't drop by 30% in a month. Right. So because of how big this is, it's almost impossible to reach there. And even if you reach there, I will just sell and I just buy back. Because if a stock can go up 50% in a month, that means maybe it has been manipulated upwards. Too many people are buying it. Then when it cools back down, then I will just buy back in. So this strategy works well.
So are you doing this on a daily basis?
On a monthly basis.
Monthly basis?
Yeah.
Okay. And then how long have you been doing this option strategy?
About 2 years.
2 years already?
Yeah.
Okay. So this is like a sustainable kind of...
I wouldn't say sustainable because like maybe next year I will be proven wrong. I would say that this has worked well for these 2 years. And...
Is this like a high risk kind of stuff?
High risk. Okay, so for options, right, there's a lot of, even if you are wrong, there's a lot of backup plans. Okay, for cost, as long as you have the stock, as long as you are willing to sell the stock at this price, at this high price,
right,
then you are okay to sell this call. So the risk is just maybe the stock after going up by 50%, you go up another 100%. So that's your risk. You are risking out the upside. And as for puts, you're risking buying the stocks, and the stock goes even lower. Right. So that's your risk.
Right. So would you advise like young investors to do this, or like you need like adequate training or stuff like that? So
this whole thing, right, to do it, you need to have a big enough capital. Then the second thing, you need to you need to own a good stock. For example, Google. Or you want to own Google, then you can do it on this stock. Some people will see that, okay, maybe this GameStop have a very high options value. This whole deposit money is worth a lot. then I want to sell it. But maybe they don't like this GameStop. Then when they are assigned this GameStop stock,
Then it doesn't make sense.
then it doesn't make sense already. So they are only greedy for the deposit money, but they don't want the stock. So
Right,
in that case, they are doing it wrongly already.
Okay.
And most of the time, cheap stocks are not that good. Even though they are cheap, you can just sell options to earn a lot of money, but cheap stocks are not good. The good stocks are the more expensive ones, which most people can't afford. So for example, like Google, you need to have like $9,000, $10,000 to make this whole thing work. I think not many people can risk this amount of money. Unless you have this amount of money, then you can start considering that. But otherwise, just stick to this basic stuff lah.
Right.
Just invest in the safe stuff, and you'll be fine.
So it's good to have a vested interest. So in case you can also just own the stock. Okay, great. I would like to talk a little bit about your content creation. So share with fellow Singaporeans, right? Especially people who wants to start to do content creation. What is your advice for that? And then how do you get started? And then where do you learn how to edit your own videos, like starting from 2019?
So content creation, right? The very first lesson is that don't listen to your wife. Okay, basically, like, okay, not that she has bad intentions or whatever. It's just that she doesn't want to see me waste time or get hurt or whatever. But I think like if that's the thing that you want to do, right? I would say just do first and don't ask for permission to succeed. So that's my advice. Can you imagine like PM Lee asking permission from his mom whether can he be prime minister or not? I think it will be very lame, right? So if you want to succeed in doing anything, just do it first. People will say, why are you doing this kind of stuff? So I think their advice are good, but if there's success that you want to look for, I think it will be a very lonely road, and not many people will understand it, and you have to go through it by yourself. Right. So that's the first thing. The other thing about YouTube is that basically you are entertainer of sorts. And the reason I was able to grow so fast was because I was able to entertain people. Investing is a very heavy topic. Yeah. So when you can make investing a fun topic, then people will start listening to you. So that's the personality part. So think of it like Robert Downey Jr. versus this Stephen Chow from Hong Kong. Both of them have different personalities. You wouldn't imagine this Robert Downey Jr. doing this Hong Kong style of talking. People will watch Robert Downey Jr. for who he is, and people will watch Stephen Chow for who he is. So same for me and you, I think. People will watch this Melvin Lim for how he presents his stuff. That's the same for me. I will watch you. This guy talks so confident, and this house is so nice. As long as people are able to connect with you, then people will start following what you have to say. Then the third thing is, I think you have to just be consistent. Like for me, this whole YouTube thing, right? The success right now, I'm at 80-something K. Right. But the first and a half year was the toughest. I barely had like 5K subscribers. Right. So basically it's almost a flat line. I was working for free for YouTube. Up until the middle of the second year, I start growing. So that's when everything clicked into place. I started to realize a lot of things. What I have put into there started to bear fruit. If you are into this whole content creation thing, just be there because you like making stuff, not because you want to make money. Because in the first year, second year, third year, or maybe even in the fifth year, you won't even make money. But if you are there just for fun, I think you can power through or maybe make it into your career when it finally slopes up one day, this whole earning money thing.
So when you started in 2019, do you foresee where you are today?
I don't So it's like, as a programmer, right, one of the things that I like to do is creating side projects. So every year I was trying to create this new app, this new game. Even it's not new, everything is just a clone of something else. Right. So I keep doing these different projects. So about 7-8 years, I thought, maybe I should try YouTube instead, because I like talking about money and no one likes listening. None of my friends like listening to me. Right. So maybe I talk on YouTube let strangers listen to me. Right. I was prepared for it to fail, just like all of my other previous projects. As long as you just keep trying, I think eventually one of them will just break through.
And how often do you release content now?
On a weekly basis, it's about 4 videos a week.
Right.
Yeah.
And how do you keep up with the content?
I can't keep up. So I'm planning to slow down. Obviously, making 3 contents with just one editor is not sustainable. Next year on, I will try to go a lot slower lah. Maybe three videos a week.
Right.
Pace myself lah. Because the whole reason I'm trying to push so hard is because I'm trying to grab the money while it's still coming in. But I realized that the process becomes a lot less enjoyable already. Like right now, I've become a lot more stressed about thinking what's the next topic to make, rather than how can I learn from this video. So the goal is different already. One is about earning money, one is about learning. So I prefer, if I don't have to worry about money, then I can focus on doing what I like, which is learning. If you enjoy what you are doing, eventually the money will just follow in lah. Maybe you know how to further improve when you don't have to think about money so much. Yeah, that's my thing.
Awesome. Great. Thanks for sharing so much, Kelvin. I think you have been very authentic, and when I talk to you, it's like, wow. And I just felt that you are a very real person as you are on video as well as here. It's great having you. Thank you so much for sharing with us and our audience.
Thanks for the invite.
It's good to have you at our PLB studio at So Far So Good.
As long as you are investing in a good stock, all these bad things are over, then there's nothing stopping the company from growing already.